Hello, hello, hello. Happy Monday morning, kicking off another week. How is everybody doing? Good morning, Patrick. Good morning, George. Good morning, Martinez. Good morning, Jacob. Good day, Christoph. Hey, everybody hiding in the background. Again, excuse me, springtime allergies. So let's see what's going on. Remember, we got Nvidia earnings this week. We got Zoom earnings after the close. Good morning, options 22. Remind me to go over. Yeah, I saw your comment. Type in the symbol again for me. I know it's a global. I just don't remember it off the top of my head. I'll go over where it sits. I did not understand what you were doing with the levels, but I'll show you where it sits from my viewpoint. We had Kashkari already talking. We had Bullard who was saying two more rate hikes this year. So we'll see how Barkin and Bostic and Daly all follow up with that. It'll probably be dovish Daly. But Bullard sees two, not necessarily in the next meeting, unless he said something specific about that. I didn't see that. Kashkari was still sort of sounding a little hawkish, but he could pause at the next meeting and reassess. Where else? We still have multiple Fed speak today, and we have the debt ceiling talks. So those are your market movers today. Those are the market movers so far. You have a little mix with the mega caps, little mixed of sort of a quiet morning. Quiet morning, nothing really standing out besides Micron down pretty decent. Groups, real estate, consumer, cyclical, and financial leading. Technology and energy lagging. Fed watch, let me refresh this because I know Bullard has been speaking, and he, with two more rate hikes this year, all right, we're sitting at about 23% for a possible rate hike next meeting in June, but the market's still not buying him at all. We're going to pause and then we're going to cut. Pause and cut still is what the market's expecting, still in greed mode, and based off, we'll check on this on the Mondays, we're still upper end of fairly valued, but in overvalued territory. So the market is definitely not cheap by any means. PE ratio 24.27 on the S&P, and the Schiller PE ratio is 29.38. These are very low. Again, this market is not cheap by any means. It's priced for perfection, and perfection has to deliver. Right at neutral gamma still. We're slightly above that. We're in positive gamma. This is roughly about 41.90 area. So we're technically in positive gamma. So dealers sell into the rallies. And we still have that big call area right around 4,200. So that could be still a short-term magnet. There are no major put levels. There's minor puts around 4,200, but everything else is down below. So, and as I mentioned, Zoom after the close, there's nothing I was really looking at this morning before the open. Zoom, and there's not a great pattern in the Zoom besides it's still trading against the weekly rotation zone. All right, so we had the gap down last night with debt ceiling stuff, and the gap's already been filled, so that's done. That's done. Let me just address IXIC real quick for I don't like that one. It's not bad. Give me the NASDAQ. There we go. So if you're looking at this, I am using for any continued rally area on the IXIC, which is a NASDAQ composite index, I'm using the highs from November of 21 back to the lows of October. It has to, remember, even a rally up to 13,150 enters the key rollover zone. And you see the highs from August of 22. That's right at that 50% level. So continued rally, that is the target I would be utilizing. It would need a close above 13,915.95, so 13,916 then for me to shift the range up here. But the next, if I was structuring plays based off the NASDAQ composite, as long as it's holding, you have a pretty decent support shelf right here. So as long as it's holding above that with the weekly rotation zone, yeah, it could run up here, but I wouldn't be making the targets up here. I'd be making the first key target 13,150. What would shift it is if we started breaking below on a weekly basis about 11,700. That takes it below everything key. So there's your little IXIC. You also see right here, that does not mean it has to rally every day. On any pullback, in the short term, I'd be watching for the daily rotation zone to hold. Let me just bump this up slightly. And you know, it's got to be in the short term above about 12,200. All right, back to the futures. Again, a little pullback on a continued rally. 42.25 to about 42.27 is first key target, then 42.42, and then 42.54. On support level, remember our gamma flip is about 41.91, and that's pretty much the key support. 41.90, 41.91. We break below that, we're going into a huge support base. Next key support is about 41.80. Then we got 41.70. So we'd have to have some serious downside momentum. Now cycles are back to the top on the daily, and we're hovering near overbought. But, you know, it's all going to be depending on people are going to be trading in the short term, at least today, off Fed speak, and more importantly, debt ceiling talks. Morning sterling. All right, let's get through some stuff, and then you can punch in the questions, or I see you already did. I'll try to get back to that in a second. Not for a continued rally. That's for a drop on IXIC. So for the continued rally, I'll get to some... We want to do this, and we want to watch for these major levels. On the overall bigger picture, using the weeklies, see how it's held that 62.5 on a weekly closing basis. That 62.5 has been held. So it's no close above there, but below there, but a close below there, then we'd start targeting the lower prices. Remember, let me take off these other ones, because this applies to, this is how I set up a framework. So you see on the longer term basis, we held that 62.5. So we pulled back into the key support between the 50 and the 62.5, right? And that support held. And now it's moving up, but I would not be targeting up here yet. Why? Because the inverse holds true from this sell-off. This is the key I just talked about before, between 50 and the 62.5. Remember how the opposite held on the down between the 50s and the 62.5. It went right to the 62.5 and held on a weekly closing basis. So this would be the area in the short term I'd be targeting. Now you get the weekly close above the 62.5, and then I start targeting up here. NASDAQ, which is very, very overbought. Cycles at the top, but the same thing. We have a little vacuum gap in here, meaning if this does start falling, it's not falling in the key support right away like the S&P. So we got to go to the shorter term levels based off of this, because we gap just below this minor support level. But your key support is about 13.8. We drop below 13.8, I'm still about 13.765, and then 13.677. So to the upside, would be 13,877, 13,898. At least a 1 hour close above 13,988. Then I'd be targeting the highs from last Thursday. The high area 13,939.50 to about 13,960. Your minor levels on a breakout play should the lows from last night's gap down hold. Your minor levels would be 13,981, but I'd really focus on 14,001. The Dow still has the double top in play, and it's still just sitting here in this consolidation range. Any rally above about 33,535 targets 33,630, then 33,735. Support, besides the overnight lows, again 33,375 area. The next major support is down about 33,300. Russell trying to hold the first cross rotation zone. Next target areas, let me just rotate this up to the forward harmonics. Next target areas, if it takes out the established high from this morning, about 1794, then nothing much till 1805, then 1814 to 1817, then 1826 to 1830. Support, oops, I didn't want to do that. Support, 1766 still, and then you don't have much down till 1741. The DAX, we finished up last week above the key, and it pulled back to the key harmonics level, which is why I like to leave that cluster on there. We do drop lower, support coming in about 16,150, key resisting 16,378 to 16,426. The VIX is still in the super low range, so again, until we get above 1830, not looking for more of a drastic pullback. Notes, inside day to Friday so far. So key support, minor support 113.11, then we get 113.06, but major support areas 112.17 to 112.19. Any rally takes us into resistance at about 114.06. Dollar index, so far not even pulling back to the daily rotation zone. Cycles rolling over. So far this is a sideways correction. Even on a pullback now, 102.40 area, I'll be watching for some kind of shorter term bottoming if we do pull back. Otherwise, it's the break above 103.20. Crude in short-term consolidation. Again, if we break above about 73.80, then I'm looking for a quick run to 74.50. But we're into a breakdown zone. So there's just not a lot besides scalpy stuff in crude, and key support coming in about 70. So there's not a lot of great setups in crude. Gold, again, any rally in gold back to 1990 to about 2002 takes us into a rollover zone. It would have to get a close back above about 2003 before I'd be watching back for the consolidation and at least a very short-term low to be put in. However, if it breaks below 1958, we got about 1944 to 1915 to 16 is key. Silver still has the double top playing out. Even on any continued rallies, just in a rotation zone, I'm watching for a rotation lower. Copper still basing sideways, a little diamond formation. So that would normally be for a continuation break lower. Japanese yen pausing at support. Let me just pull these off at this. Let me just raise them to the next pausing bar. See what we got here. So on a breakout above last Thursday's highs, we got a cluster about 1939.25 to 1939.40. Then next major level is about 1940.58. Euro, going to be watching for the next rollover play after a bounce. But anywhere between 108.46 and about 108.76 is key resistance. Pound is nothing. It needs to break below about 124.12 before I get interested, looking for a further decline. Or the breakout to the upside is above 124.90. Tesla, slight gap up. So anything to the downside would be for the gap fill play, and then key support coming in about 176.60. Resistance on a rally, if it gets above Friday's highs, you still have a gap left behind at 184.31. Spiders in the Qs. Spiders in the Qs, pretty much a flat opening from Friday. We don't even have a great strong pausing bar, but besides looking at about resistance 420.72 to 421.09 and then 423.02. Major support is 415.93 to 416. And the same as the S&P, you're coming back into here into a major support zone. So it has to do some pretty significant technical damage before we get a clear breakdown play, unless we get really strong downside momentum with weak internals, which would be probably off some headline coming out related to the debt ceiling. Qs, same thing as the NASDAQ. There's a pocket below. Next key area, let's just go. We're going to have a gap down in the Qs. So the first thing to the upside would be for the gap fill, which is 336.50. So just a minor gap fill. And then the next key target, besides being Friday's highs at 338.21, is 339.08. And then roughly 344.80 to the downside. Again, the key area I'd be looking at is about 333 for support. We fall below that, 329. Good morning, Anissa. Let's see. Christoph, is J&J a double top? And how do you like daily double bottom H-band? Is J&J a double top? No, that's a mess. Nope. You have a clear path move to the downside. You got a first cross rotation zone. So as long as you don't get a close above about 161 again, which is this minor breakdown zone, not just the rotation zone, and the 50 EMA, as long as that's personally what I'd use on a closing basis for a stop. You've already done the gap fill, but you have a clear path lower. So on a rollover play, I would just be utilizing uh, 154.50 as a key target area because you're into a daily clear path move. You can I would look for a stop reduction about 156, which was the prior breakout zone. H-band, let me take a look on the 4-hour. Yeah, that's a technically triggered. It's not the best looking one, but it's technically correct. So that's technically correct with, and the first target is pretty much the 50 EMA. With the invalidation point being, oops, wrong way. Close below 952 or trade below 939 invalidates it at this point. But that works. Bud has a weekly close. Let's get a Bud. Well, you have since we had the major, oh, that's from before. That's from before. We already had the double top play out. And now we're weekly close was 62.5 retracement from the gap left. From the gap, November 1st, 2022. I would not be using the retracement gaps anymore for that after that long a time. By the way, don't go out that far on retracement gap plays. Just use your key harmonics. This is trading key support. You break down below there, you have this. Just look for a return to this gap, 56.60. And you got the 200 right in front of there, but I'd be looking, if it breaks below this 58 level, you probably have a quick gap play here. And then you have this the support area between the 50 and the 62.5, but the minor support would be 55.33. But right now, this is very key support coming in. Hey, Paul. Hey, Coco. You're welcome, Christoph. From Zoom, which is after the close. I mean, still, they're still trading a P to E ratio of 214, and I'm not seeing the growth mode that strong. If they did have some kind of blowout earnings, the key target would be 79. The minor target is about 74. The major target is 79.50. Is there a great pattern? No, and it's against the flattening out weekly rotation zone. So there's not much going on there. There's not a fantastic pattern down here. You're welcome, Anissa. All right, let's just peek back at the S&P. Going into the open. Going into the open, key support area is 4,200 in the minor sense. The key breakout area is now about 42.10. And by the way, above 42.10, you have a minor clear path with a breakdown zone of 42.16. And then you're back to the high area Friday pre-market or after the open. So those are the two levels I'd be watching going into the open. With that, thank you for tuning in, and I shall talk to everyone later. Bye for now.